Morning and thanks so much for tuning in. This is BQ Prime. My name is Alex Matthew and this is the first edition of a brand new show, Trade Talks. With me is Hiral Dadia. Morning, Hiral.
Good morning, Alex.
So we're setting up for the week's trade and all indications are, as things stand right now, positive for the Indian equity markets. But let's set the context. Last week, it was all about the broader markets, wasn't it? The benchmark didn't do anything.
Absolutely. And clearly, if you see from here on, there is consolidation which is on the cards, and that's what Nifty and Bank Nifty are indicating it. So broader markets is something which will continue to remain in focus.
So we mentioned the Bank Nifty that has been an underperformer. In fact, last week it declined about 0.2%, and the Nifty IT also as a pack was underperforming. In fact, that's one of the elements on today's program. But without going into too much detail right now, because we'll be discussing several elements, let's talk about the technical levels to watch out for, Hiral, for the Nifty as well as the Bank Nifty. What are we looking at?
So in terms of the technical levels as well, one indication that we're picking up from the FIs is interesting. FIs in the last 3 trading sessions have turned negative, and that is giving you an indication that yes, there is a speed breaker ahead for the markets. Now, if you see in terms of Nifty as well as Bank Nifty, let's quickly look at the OI additions. 18,500 strike has seen the highest put OI, whereas 18,600 has seen the highest call OI as well. Now, taking these aspects into consideration, it's really important for Nifty to sustain above those 18,500 to 18,600 levels to see a sustained up move from here on. So we will watch out for these levels clearly. Moving on, if you see in terms of the Bank Nifty as well, there has been consolidation around those 44,000 levels. And Alex, that has continued for a 4th consecutive week, right? So from here on, it's the private heavyweights which have been under pressure. Now, this continued outperformance from the banking space in the last 2 months actually might have triggered that profit booking as well that we've been seeing. So what analysts are saying is buy on dips is going to be the best strategy with regards to Bank Nifty, but the key support and resistance levels are going to be important to watch out for, as you might be seeing on the screen as well right now.
Absolutely. Now, beyond the equity markets, of course, the headline as we head into the new week is going to be oil. It is oil, in fact, after the OPEC Plus meeting over the weekend, where you saw a surprise move by the Kingdom of Saudi Arabia. There was a cut of 1 million barrels per day for this current month. And there were a few intricacies in the dealings that took place with the OPEC Plus as well. To unpack all of that and talk about the implications for the market as a whole, in the context of those demand-supply pushes and pulls that we're currently seeing, we have with us Azlin Ahmad, who is editor crude oil at Argus. Thanks so much, Azlin, for taking the time. Help contextualize this for us. As somebody that is a large buyer, the Indian market, how does this latest update impact the demand picture globally?
It's not going to have a huge impact on the demand, but it will have I think it will have some impact in pushing up crude oil prices. And I think that was what Saudi Arabia aimed to do. I mean, we don't know all the intricacies of the meeting because, it is a closed door meeting, but it's possible that a lot of the OPEC members didn't really want to have a cut, and which is why Saudi Arabia is going alone. But the fact that it's cutting another 1 million barrels per day on top of 500,000 barrels per day that it had committed to in April, I think will at least tighten the market. But it just depends on how long they decide to cut this 1 million barrels per day, because right now they're just saying July.
Right. So, Azlin, good morning. As you mentioned, Saudi Arabia is just talking with regards to month of July. But overall, if you see the voluntary cuts that are coming in from the 9 OPEC countries, they have been extended from December 2023 to December 2024. That's point number 1. And secondly, if you see in terms of where the output baseline is concerned, that is redistributed as well in 2024. What would both these points actually mean for the oil market right now if you have to take output into consideration?
Well, to be perfectly honest, that bit of the agreement, I don't think that it will have a big impact in terms of the prices, because it's going to be 2024. I think we've got 6 months to go, and the market is very much focused on what's happening in the second half of 2023. So if that had been all the agreement in the OPEC meeting, I think that we wouldn't have seen any big change in prices. But I think the most bullish part is the Saudi Arabia going alone. In terms of the fundamentals of the market, if all the OPEC Plus members, and that includes Russia, does deliver on their 2nd of April announcement on cuts, we do think that the market will tighten even without the Saudi Arabia extra cuts. So that the market should become more balanced in the second half of 2023. So that's how we see it. So the big question right now is, if Saudi Arabia continues to cut beyond July, then we could see supplies will tighten.
So we've been discussing the supply side of things, but the overarching concern, I think, that has been raised by some of these producing nations is the demand factor, particularly from countries like China. So what is the downside risk to your current assumption? What if things go even further south with regard to economic growth there?
Yeah. Okay. Well, the thing is that with the Argus Consulting team, before this OPEC meeting, the Argus Consulting team were predicting in the very short term, right, about ICE Brent $78, $79 and going up to around $80 in the third quarter, right? So, and this, we are assuming that China growth will actually be quite muted. The Argus Consulting team predicts that China growth this year is only going to be about 700,000 barrels per day. And that's a lot lower than, I think, what the OPEC and what some other analysts have predicted. So we have tempered our expectations of China growth. And I think that China will grow, but it will be slower and it will not be as big as what everyone had expected at the start of 2023.
Right. So overall, my last question coming to over here, Azlin, is from a price trend perspective, how are you seeing this? Because clearly the June OPEC Plus meeting has actually given us a price reaction that was very much foretold, right? So what is that range we should be watching out for from a lower end as well as from an upper end? And where do you see it actually, probably stabilizing?
That is really a tough question right now. But I think that looking at where the fundamentals are, we should be in the low 80s at least, okay? If I think that given if there's no extension in the Saudi 1 million barrel per day cuts, I think we would still be in the low 80s. We don't see the market going up to the 90s or 200 at the moment. But I think that a lot of it, the upside, will greatly depend on Saudi Arabia's action beyond July and what they do with their production.
Please. Thanks so much, Azlin, for joining us and for putting all of that into context. That's, of course, Hiral, going to have a big bearing on domestic factors as well as we look at inflation, because a lot of that price increase of crude is filtered through in the inflation number, but that number has been cooling off. And the reason I'm pointing that out is that we have the MPC meeting later this week. Let's talk about the expectations broadly.
Right. So if you see overall in terms of the MPC, now I was just reading an interesting report by Dr. Soumyakanti Ghosh, and his headline is absolutely fantastic. A pause, but a growth upgrade and an inflation downgrade coming. Is that a question that we will be watching out for? And globally, if you see in terms of the trend that we have been picking up, Alex, is that it's a status quo across in terms of the rate cycle, right? And in terms of the global growth slowdown as well. Now, the other countries are far behind. The ones that are topping the list is India and China, though the difference between the first and second is also a huge one, right? So this MPC is going to be an interesting one to watch out for in terms of what happens taking the global markets into consideration.
Absolutely. And this comes just a week before the US Fed meeting on the 13th and 14th. And of course, the latest data on the jobs front was much better than expected. Expectations there, 70%, I think, is the number or that is building for a status quo, as Hiral pointed out, for the Fed as well. So that's the context for monetary policy and economy. But let's talk about sectors and stocks that you should focus on heading into trade today. Sajid is joining in to talk about an interesting report that came in from DART a short while back, and this is on the cement pack. They talked about the demand trends as well as the likelihood of a price increase, right?
That's right. There's also a report of Jeffries, which talks about how the cement has been doing for last couple of months, April and May. If you look at what the report says, is that cement prices have been largely stable across the country, across the 5 regions. The cement market is divided into 4 or 5 zones, which is northeast, west, south, and the central zone. There have been marginal hikes in the western part of it, especially Mumbai by 5 rupees, but in other regions where there have been attempts to increase prices by 10 to 15 rupees, there has been reversal of those prices because there's a huge issue with respect to price absorption coming in these markets. And for the first 2 months of this financial year, April and May, there hasn't been any significant price increase, though volumes have been higher, especially led by infrastructure development, which is happening across the country, and it's been in teens that the growth has been seen in some of the cement demand. But for individual house builders market, there has been some sluggishness, and this is where the builders and others construction work of housing comes into play. There's been some sluggishness in demand coming there. But if you look at from the company's point of view, April and May has been good months for them. Costs have been reduced, especially energy costs have been reduced because petcoke prices have fallen by at least 40%, and so the earnings are going to be boosted to that extent because of the energy costs coming down. Many of the companies are sitting on inventories of 1 to 3 months. So what the effect of that is going to come in only in Q2 and Q3 of this financial year for many of the companies, and the tailwind will be primarily led by declining energy costs. Alex.
Right. So, in fact, overall, Sajid, it's going to be interesting to see as to how reducing raw material prices and increase in prices will actually aid in terms of profitability and margins if the markets actually accept that 5 to almost a 40% price increase that is anticipated in the month of June.
That's true, but it's not going to be absorbed by the market because they've been trying to attempt to push those prices, and they have been pushed back. And if they're increasing by 10 rupees, it gets pushed by 10 to 15 rupees. So the market is little sluggish because the housings is a slow burner there because it's not going great guns there. So even though we've seen a lot of real estate companies talking of projects and pre-sales, everything, the construction activity is slow to pick up. That's what it means. And also, if you look at from a company's point of view, we may see growth coming in a top line only to the extent of volume growth which is coming in, and
Right.
pricing may be staying stable, but margins are going to improve because your cost is coming down, and profitability increases because of that.
That's going to be a segment we will be focusing on for the next couple of sessions. But moving on, Alex, you have one more sector that we need to watch out for is in terms of IT. If you see the last couple of trading sessions from the lows it hit in April, we've seen a fantastic recovery with regards to the IT segment. In fact, Jaspreet is here. Jaspreet, you love doing correlations with the US markets as well, right?
Right.
Now,
It's a fun activity to do.
Absolutely. So if you see the way the NASDAQ has been and the correlation that in the Nifty IT index has with NASDAQ, what is it actually pointing out to you? Because to me, there's a sense that I get that our index, the Nifty IT index, is just ready to set and go.
So, I mean, if you look at it on a 5-year horizon, the Nifty IT has been the outperformer. But on a shorter time horizon, just to look at year-to-date numbers here, the Nasdaq is up 27% year-to-date. The Nifty IT is up 2.06% year-to-date. Now, I want to break into components here as well, because this is where it gets interesting. Nvidia alone is up 174% year-to-date. Meta is up 118% year-to-date, and Microsoft, Apple, Amazon, all of them upwards of 40% year-to-date. So these numbers clearly sort of show you that there's an optimism around these companies, and also some of this optimism clearly in the case of Nvidia or Microsoft is AI-driven, generative AI-driven, and ChatGPT has been on top of mind for so many people. On the other hand, it also makes you wonder whether Indian IT companies, if they want to recover here, do they also need to tap into this innovation cycle? Do they need to add on a lot of things, and will that be the next fulcrum point for them to accelerate here? An update that we did get on an acquisition recently was Mphasis is set to acquire 100% stake in EBECS, which is a UK-based tech services company and a subsidiary of DXC as well. Overall, I mean, it's they haven't disclosed the cost of the acquisition, but Morgan Stanley estimates that the revenue contribution will be about less than 2%. So not a material acquisition, but we're seeing some consolidation play out in the tech sector in the UK as well.
Interesting.
Right. And overall, Alex, if you see, it's the mid-cap IT space, which is seeing a better run as compared to the large-cap IT space, right? So that's going to be interesting.
And software as a service as well, because that's, you have demand irrespective of when things are playing out, right? How things
Are playing out. Absolutely. In fact, apart from that, Jaspreet, you're looking at a Mahindra Finance as well in terms of the May update that has come in. What's it indicating?
So good numbers there. Disbursements, we've seen them grow by 39% year on year to 4,150 crores. And their collection efficiency has also improved from 95% in May last year to 96% now. So asset quality remains range bound. Collection efficiency is good. And the SBI Eco-Wrap note SBI note that Hero mentioned, in the morning, it was also mentioning that diesel consumption has been buoyant, real wages are growing. So it could be a net positive for someone like Mahindra Financial Services for sure.
Interesting. And in that context, thanks so much for that, Jaspreet. In that context, we're talking about rural demand also, because we were expecting South states, particularly Kerala, to have the onset of the monsoon already at this point, and that's delayed by another 2 or 3 or 4 days. That's the latest expectation, and that would affect sowing, and thereby you could also see some of these companies that focus on rural, maybe the two-wheeler players, Hero MotoCorp, for example.
Your tractors, your agri companies, your FMCG companies. I think that entire gamut probably will start coming into focus.
Absolutely. Talking about stocks in focus and stocks to watch, we've got Monal joining in to tell you a few more stocks in the news. Monal, what do you have for us?
Good morning. Well, the first one on the IRDAI, the insurance regulator, on Friday evening, has instructed SBI Life to take over 2 lakh policy liabilities for the stressed Sahara India life insurance with immediate effect. Now, this is unlikely to have a major impact on the business of SBI Life Insurance, as Sahara is really small in size. This has been said by one of the experts to PTI. Now, moving on, pharma as a space has been pretty active over the weekend. US FDA has been in focus for the past 1 year, where it's been doing a lot of inspections back to back. That's when Indoco Remedies comes in. It's received an official action indicated status by the US FDA, which means that the existing products will continue, but approvals for future products will be stalled. And also that there has been some action that has been instructed, that the facility would be instructed to take to get cleared. Now, this facility is important, the Goa facility, because the overall revenues of Indoco Remedies are around 16% of its total sales, and 70% come from this impacted facility. So this could have a negative impact on the stock today. Its other CRO services plant has been given a clearance. Now, Zydus Life Sciences also has been given a clearance, no observations at all. It's the animal health drug manufacturing facility, which is at an SEZ in Ahmedabad. Now, Lupin has announced the launch of Darunavir, which is for the treatment of HIV. Now, it has been given an exclusivity of 180 days in 2 strengths, the 600 milligram strength and the 800 milligram, which are expected to have an estimated sales of $308 million in the US, as per the MAT 2023 March data. Now, this would mean really positive for Lupin. These estimates are made by Antique Broking. Now, Tata Chemicals has also vouched to make an investment for around 13,000 crores. The state government of Gujarat said. It signed an MOU wherein it will be setting up a 20 gigawatt capacity of lithium ion in Gujarat. So that's about it. A couple of stocks on the radar today.
Definitely. And particularly the Tata Group, of course, venturing into battery manufacturing. That's a key one to watch as well. Monal, thanks so much for joining in. That more or less wraps things up. We're just about 10 minutes away from the market open, and we should have a sense of how things pan out. But stay tuned. There's a lot more coming up over the course of the day. You'll find all of the live market action and all of the news in the financial space right here on BQ Prime.